But I've got some cautious notes out today that certainly got our attention. Maybe the most cautious of coming from Bank of America today says 5 reasons to curb your enthusiasm. Yeah, they're bullish on the economy, not so much on stocks from here. S&P is going to end the year at 3,800. That's an 8% drop from where we are now. That makes sense to you?
We're not that cautious, but we are waiting with bated breath because the way and I generally agree with Bank of America's perspective, but just not with the negative spin. So we're looking at the market as needing to answer a lot of unanswered questions that'll only come with the passage of time throughout the rest of the year. So we see things like high valuations, but then there's strong earnings growth. We see fiscal stimulus, which is great, but debt levels and interest rates are going up. We see Fed support that's been terrific. It's not going to last forever. We all know the economy's on fire, but we don't know how much of that is really incorporated into the market. So we think that we just need to play out the rest of the year, see how these things answer themselves, and that's what we need before we're going to say, yeah, we should be up or down from here. Right now, we're just kind of taking a pause and being careful. We also think that the rotation that we saw over the past 7 months is going to continue. So you could still be in areas of the market that have really strong potential and really huge upside ahead. You don't need to have no return just because the overall market might plateau or back off.
So, Joe, Savita Subramanian is the author of this note today. By the way, she's going to be on the closing bell, so she can answer for, the specific things that she says here. She says sentiment is increasingly euphoric. She says valuations are lofty. Stimulus is at its peak. And they believe the market has overly priced in good news. So let me just ask you straight up. Is it time to be cautious or is it time to be bullish?
I had said towards the end of March that we were going to see technology experience a little bit of a rebound recovery into earnings. We're seeing exactly that. I think on the other side of that, the view does become a little bit cloudier. Scott, let's understand the Federal Reserve's balance sheet has grown by 6% so far year to date. What's the S&P up? 10.5% year to date. So is the Federal Reserve balance sheet going to continue to grow? The economic optimism does not suggest that it should. And I think at some point we are going to be talking about a Federal Reserve balance sheet that will actually begin to pause. And at that point, I think equities and risk assets will pause with it.
But everybody's been bullish lately, Joe. I mean, no, you haven't said that to me lately. I've got the Fed chair. He's been on TV a couple of times, whether it was with Sarah Eisen or on 60 Minutes. I mean, he's dovish. Jeremy Siegel comes on and says we're in the 3rd inning. There's nothing to even worry about until the Fed first signals it's going to do something, and that's not coming between now and the end of the year. Now we're getting cautious. This sounds like a different tone. So, Joe.
So what I'm communicating to you is what the risk is for the market and the reasoning behind why we would see a pause on the other side of earnings. If the economic strength continues, if the economic optimism continues to be reflected both in consumer and corporate activities, I don't see how the Federal Reserve can continue to grow the size of its balance sheet. And there will be a point of reckoning at which, if the Federal Reserve needs to communicate that they will pause the growth of the balance sheet, risk assets will pause at that time as well. It will ultimately be a pause that refreshes. But that, to me, is the risk on the other side of earnings in an environment that you are correct, Scott. I've been communicating. It is sunny skies. It's incredibly calm, and it's incredibly favorable to be invested in risk assets.
All right. I'm just making sure, because you have been saying it's sunny lately, but then you threw in the cloudy word. So I was wondering if you changed your view. Michael Farr, bullish or cautious? That's what I want to know. It does seem like a growing number of people were on the same side of the boat, whether it was Siegel and other bulls who have come on the air and suggested that stocks have a long runway before we even need to worry. Do you agree with them, or we have problems?
Yes, absolutely, Scott. I mean, both are right, okay? I mean, both are right. Valuations at our all-time highs, so you should be a little bit cautious. But frankly, we've never seen anything like this. We've never seen this kind of monetary stimulus. $900 billion in December, another trillion, 900 billion, and now 1.9 trillion, and now a new stimulus package and a reopening and a Fed that's still buying, as Joe was saying, and increasing their balance sheet, and a Fed that continues to be dovish. We've never really seen this much gunpowder being thrown at the fire at any point before. So I I don't see really how you can bet against this market. To that extent, I'm bullish.